Okay, this video is about the petrodollar system, what that is, and sort of its economic implications, how the petrodollar system, that idea, relates to the global economy and what it means for traders. Key points in this video. The basic idea of the system is that oil exporting countries, we're talking about OPEC here, denominate their transactions in US dollars. They denominate their oil transactions in US dollars. So when they're selling oil, they're pricing it in dollars, they're taking dollars and receiving dollars for the oil that they're selling to other countries. This naturally creates demand for US dollars because it creates a scenario where if you want to buy oil, you basically need dollars first. And oil is, of course, still very, very necessary. It was even more necessary years ago, still incredibly necessary in our economy around the world. Now, however, oil transactions are increasingly dominating yuan, renminbi. So this whole system, the petrodollar system, is sort of fading away, and more oil is being produced by non-OPEC countries. So a lot of oil is now not denominated in dollars. Some will say this will contribute to a long-term decline in the US dollar and a major geopolitical economic shift in the world. So if the majority of the oil in the world is priced and denominated in dollars, and this creates a lot of demand for dollars, and then we shift away from the system where oil is now priced in other currencies, well, that means there might be less demand for the dollar. That has a lot of potential ramifications on the value of the dollar and value of other asset prices. Okay, to really understand the petrodollar system and its true impact in the world today, we need to rewind and get a little history lesson in. From 1944 to 1971, on the Bretton Woods system, the dollar is basically a proxy for gold. So the international monetary system that was established in 1944 at the Bretton Woods Agreement was that the dollar would be fixed to gold. The exchange rate was $35 an ounce, and every other country would hold dollars, knowing that they could go to the United States, redeem those dollars for gold. So gold was really the reserve currency of the world, but dollars were a proxy for gold because every country knew that they could hold dollars and the exchange rate was fixed. That was sort of the idea, and that had created a lot of demand for dollars because you knew you could just convert them for gold, and everyone agreed that was a safe way of having the dollar be the reserve currency. However, in the 60s, the U.S. definitely started to a lot of deficit spending. A lot of this was related to the Vietnam War. U.S. needed to print a lot of money to finance the war. Basically, what it boils down to is print a lot of money to finance the war. And so it became harder for the U.S. to live up to its promise of, you give us $35, we will give you an ounce of gold. Because there were so many dollars in circulation, they were essentially defaulting on that promise. Charles de Gaulle of France started calling them and started demanding to redeem his gold, giving dollars to in exchange and taking his gold back. Charles de Gaulle of France did this, and that sort of led to the standard needing to be broken. Okay, so then in 1971, Nixon says, you know what, gold standard's over, we're not pegging the dollar to gold anymore, and now that sort of gave birth to the modern monetary system where everything is free-floating. However, when that move occurred, when Nixon said, you know what, the peg to gold is broken, it was a politically controversial move in some sense because it was a lot of these countries that were holding dollars with the expectation that this could be redeemed for gold may have felt cheated. And it was also at that point that the devaluation that the dollar had essentially been going, the devaluation that had been going on the dollar was sort of now realized and accepted internationally. So we saw a big spike in the price of oil, where a lot of the Arab OPEC countries said, you know what, we need to raise the price of oil because these are devalued dollars now. We cannot exchange them in for gold anymore. So the price of oil went up because it was essentially, the dollar, you devalued the dollar really, so we need to raise the price of gold. And that led to the oil price shock in 1973. You can see it on the screen now. Pretty big increase in the price of gold. So this is directly related to going off the gold standard and devaluing the dollar by inflation in the 60s. Okay, so at this point, Henry Kissinger comes on the scene, and they come up with a scheme to create the petrodollar, which is basically they go to Arab countries and say, you price and price your oil exports in U.S. dollars, right? That will create demand for U.S. dollars, and that's a way of sort of recreating the dollar gold standard. It's like, all right, we lost the link to gold, but if we have a link to oil, which is internationally necessary, that will create demand for dollars, and that will stabilize the dollar and allow the whole system of the dollar, essentially being the reserve currency, to continue. The deal that was struck in 1973 was that the U.S. would provide military protection to OPEC countries, and in exchange, oil transactions that the OPEC countries are engaged in are denominated in U.S. dollars. Moreover, when an OPEC country gets these dollars and they have a surplus of these dollars, they recycle them into U.S. Treasuries. So rather than just holding on to or rather than getting the dollars and immediately converting them to another currency, they take these dollars and they buy U.S. Treasuries for them. That created a lot of demand for U.S. debt. So the U.S. could continue spending freely, racking up a lot of debt, because they knew there was all this demand for it. The OPEC countries would have their dollars and they would recycle them back into buying treasuries. So you can see sort of these ideas are illustrated on the screen right now, right? Make sure that there is a lot of demand for oil. You know, it's the primary source of energy in the world now, as it was, in the 70s. If those transactions are denominated in dollars, that creates a demand for dollars implicitly. And this also allows the value of the dollar to be preserved. It allows the U.S. to be an import-driven economy, allows the U.S. to be a finance-driven economy, and that a lot of the U.S. economy is built around selling treasuries or selling financial instruments. All of that is enabled by there being a lot of demand for U.S. dollars, a lot of demand for U.S. treasuries, and a high value of the U.S. dollar. Also, as we can see here, because there's so much demand, all these OPEC countries are, taking their dollars and agreeing to buy treasuries with them. It creates a lot of demand for U.S. treasuries, and that allows the U.S. to spend very freely and to rack up a lot of debt, knowing that there's always demand for this debt. So the interest rate on this debt can be very low because the OPEC countries have agreed to continue buying this debt. And that allows the U.S. economy that we've currently seen, very import-driven and very treasury bond-driven in terms of selling financial assets overall. Various times throughout the past 40 years, 45 years, certain political leaders amongst OPEC nations have tried to go off the agreement. They've tried to have their oil transactions denominated in other currencies, euro, gold, and the result hasn't always been particularly favorable for them. Omar Gaddafi was removed from office, Saddam Hussein, U.S. military intervention to remove him, Ahmadinejad from Iran. He sort of left office. He had probably the best outcome of the three individuals you can see on the bottom right here, but it is something that's a little interesting, and a lot of people will argue that the U.S. works very aggressively and even employs military force if there's a leader in an OPEC nation who wishes to get off this agreement. Okay, but now we are entering perhaps a new era. A lot of that is related to Russia and China, in that, Russia is a major oil producer in the world, and they are denominating a lot of their oil contracts in yuan, the renminbi, the currency used by China. So you can see that on the screen right now. China's buying more oil. They're partnering with Russia and starting to partner with some select OPEC countries. So we'll see, and some people will say that the U.S. will intervene militarily, and that's been a lot of what's behind U.S. military actions in the Middle East. Make sure these countries stay on the petrodollar. But for now, we are definitely seeing a shift towards what could be called the petro-yuan. And you're seeing petrodollar exports are now negative, or they were negative in 2014 for the first time in 18 years. So if this trend continues, that means that the petrodollar countries, the OPEC nations that are exporting oil and taking dollars in, if their exports are negative, that means they won't have dollars left over to recycle into buying U.S. treasuries. That means there's less demand for treasuries, there's less demand for the U.S. dollar. That could lead to a spike in U.S. Treasury interest rates. That could lead to a sell-off in treasuries. That could lead to a sell-off in the dollar. And that could lead to a major shift in the U.S. economy overall, right? So U.S. cannot import as much. They cannot have a debt-driven economy as much. the U.S. financial industry in terms of selling Treasury bonds, which in turn leads to selling stocks and insurance products. All of that could decline, and we could see the U.S. radically transform itself with a weaker dollar and lower imports. So really becoming a very different type of economy. You know, in the background, what you're seeing right now is the dollar-yuan chart. And basically, if this thesis holds true, we would see the dollar-yuan exchange rate decline. If the petrodollar is being replaced by the petro-yuan, we'd see the U.S. dollar decline in value and the yuan rise in value. And we have seen that, you know, especially since 2005, you know, where the dollar-yuan exchange rate was 8.2. We are now seeing $1 gets you about 6.4 yuan. We have seen a little bit of an up channel here from 2014. So whether this is just a bounce and an overall downtrend, you could definitely still argue that. I think, you know, you'd need to break over 7, maybe even 7.5 to say, all right, the downtrend is definitely over. But so far, this looks like a slow trend that's unfolding where the dollar is losing value, the yuan is rising, and a lot of this may be related to the fact that oil, which is still necessary for the global economy, is increasingly being transacted in yuan and not US dollars. That's the basic story. You know, it depends on, there may be people who say it's not as significant. It's certainly going to play out over a long period of time, or has so far. Any questions you have, anything you want to add, join us at informedtrades.com. If you like this video, help us out. Visit informedtrades.com/donate to make a contribution. You can also like this video on YouTube, share it on Facebook, Google+. That helps us out a lot as well. Best of luck in your trading and investing. We'll see you next time. Take care.